What's going on, guys? Thank you guys for tuning in to another video. We have a good one today. All right, we're gonna break down strategies. I know a lot of people kind of struggle with trying to figure out what strategy works best for them. Now, just to kind of give you guys a little bit of background on me, I've been in the market since 2010, so I've been trading since 2010, so it's been a long time. All right, I've done a lot of that, went through a lot of trials and tribulations when it comes to trading the markets, but I want to give you guys the top 3 trading strategies that I've found to work in the markets. All right, now you got to understand also market conditions. Every year, every 6 months, you can have a different market condition. All right, but these have been the most tried and true strategies that have worked for me. All right, so the first one has been the breakouts with volume. The second one has been the orb, and the third one has been gap fills. All right, my 2 favorite though, I have to say, would be the breakouts with volume, looking at price action, and the gap fills. All right, now a lot of people don't really know what it is, but I want to show you guys in the charts what exactly it looks like and how you guys can apply it when it comes to trading as well. All right, now let's dive into the charts and let's break it down. That way you guys can see what it looks like. All right, guys, so the first thing that we want to go over is we want to go over the gap fills, all right, and understanding what is a gap. All right, now this is the first strategy. Gaps usually have a 90% probability, okay? So 90% of the times the gaps are going to close unless we are extremely far away from the gap. All right, now I'm going to show you guys here what that looks like. Now also I want you guys to understand that a gap is when the market has either closed higher or lower than the previous day, okay? So as you guys can see, I don't want to take off pre-market right here, all right, but as you guys can see, we closed here, all right, at 579 the previous day, and then on the following day we opened up at 586. All right, so that's leaving us a gap. So this is what I'm going to do, as a matter of fact. So here we go. This will give you guys a better look at what it is that I am looking at, okay? So, and what it is the gaps fills are. So these are gaps here, right? In the market, these have left, this has left a gap. You guys can see this is wide open. This is extremely open here. Price has either closed or opened above the previous day, leaving a gap. Now these have a 90% probability of closing, and I want you guys to see how it is that we draw these out. All right. Now we had a gap right here. All right, I'm gonna do this one right here. Now a lot of people draw the gaps like this. They'll do it from this wick here to this wick right here. All right, you've left a lot on the table if you draw it like this. Gaps are either from open to close or close to open. All right, so now this is how you draw these. All right, you're gonna go, all this here is the gap. All right, now these here have a 90% probability of closing, and I want you guys to see, look at how we came down on these candles here and we filled it. All right, so if you played puts the previous day and you saw that this here, I'm going to change the color on this one. You saw that we had a gap here and you wanted to play the gap fill, so then you would have played puts right here. All right, now let's say it doesn't happen that quick. All right, let's say now we drew out the gap here. All right, so we're gonna go from market closed there and it opened here. All right, so I'm gonna extend this. All right, we're gonna extend this out. That way you guys can see how this looks. Bam. All right. Now, and again, this is a gap fill strategy, all right? Just so you guys can understand what this strategy looks like. Let's make this a little bit more transparent. There you go. All right, remove this one. So here we have a gap, all right? Now, we touch it a little bit right here, but I mean, you probably would have got faked out trying to enter and play for calls on here, all right? You have to understand volume has to play a part in this as well, all right? So you want to see volume going into the gap. Now, we don't see this. This gap happens on, what day is this? 4-3 and 4-4, all right? That's when the gap occurs. We don't fill this gap until 4-9, 4-10, 4-9 actually, I'm sorry. Yeah, 4-9 is when we fill the gap. All right. So the gap occurred on 4-4 and on 4-9 we filled it. All right. And look how we filled. Huge engulfing candles filling the gap nicely. All right. If you play the calls on this one, as you were filling the gap, you made an amazing play. All right. So that's what a gap looks like. Now I'm gonna do one more so you guys can see. Here's another one. We have a gap right here. All right. This one's gonna go from close to open. Extend it. Bam. All right. Now, do we see any gaps? All right. Yeah, we have a gap. The market's been moving a little bit sideways, but we feel it. But as you guys can see, these candles are extremely small. There is no volatility in these candles whatsoever. Yeah, and then, I mean, it's SPY, but yeah, this is kind of a horrible example, to tell you the truth, because we don't go into the gap with any volatility, but we get filled. The minute that we do go into this gap, we do get filled, and we come all the way out of the gap on top. All right, for the most part. But we have another gap right here. That's for when market starts coming down. There's another gap right here. All right. There's another gap right there. So just so you guys can see, give you guys an understanding of what it is that these gaps, what they look like and how you can play these gaps. Strategy number one. Strategy number two, which is probably one of my favorites, like hands down, 10 out of 10, I absolutely love it, are breakouts. All right, breakouts with volume, looking at price action. All right, so let's get into that one. All right, so our other strategy we have here is our breakout strategy. All right, so this is what I want you guys to see here. This strategy has to be, it works maybe 80% of the time, I want to say. All right, probably a little bit higher, to tell you the truth. Probably maybe 85% of the time it works. Now, this strategy, the breakout with volume strategy, I don't want to say, it's more so for more experienced and a little bit of advanced traders. All right, because like what I'm showing you here, there's a lot of other stuff that play a part when I'm playing breakouts. All right, so I'm gonna give that to you as well. So one thing that I look at is I look at volume. All right, I look at level 2. I try to see where the ask and the bid is at. All right, how far away are we, or how close we are when it comes to the ask and the bid. Another thing that I look at is I like to see the footprint chart. Okay, I like to know who is in control. are the buyers in control or are the sellers in control? All right. So that is all the stuff that I look at when I am playing these breakouts with volume. All right, but I want to give you just a little example of what that looks like here. All right, so here we have the 300 range on Tesla. All right, and I'm going to highlight this for you guys so you guys can see. This is our area where we break out at. Now, as we are approaching, we start to consolidate, okay? The buyers and sellers are becoming, having agreements on price here, all right? But very quickly, the buyers take over, all right? We have our engulfing candle here, our green candle, but I don't want you to just look at this candle here, all right? I'm gonna bring this down just a little bit. I want you guys to look at price. I want you to look at volume, all right? Look at how high this volume is right here, all right? That was almost pretty close to the opening candle, all right? And yeah, as you can see, we pulled back just a little bit. We didn't close above our 300 range, but that volume right there should have told us everything, all right? And yeah, from there we just broke out. We shot up from 300 all the way to, what is that, 307. Now, me as a scalp trader, I absolutely love that play, all right? I don't think that I would have played it up to 307. I probably would have played it up to 305 or so. But I mean, I have to look at the charts more in detail. But this is just an example of what this looks like, okay? This here is a breakout with volume strategy. Now, like I said, you have to add a couple other things to this that you need to look at. It's not like, all right, I charted my resistance, my supports. Now I want to break out of whatever the resistance level is. Okay, no. I look at volume, I look at level twos, I look at the footprint charts. I like to see where the ask and the bid is at. Are the buyers or the sellers in agreement on a price? Or are they far away? What does that look like? Okay, so those are all the stuff that I like to look at when I'm trading my breakout strategy. All right. Now, another strategy that I want to go over with you guys is the orb. All right, so this here is a executed orb strategy that is kind of picture perfect here. All right, so how the orb is, all right, let me delete these so you guys can see. All right, I'm gonna delete this. I'm gonna start off. So the orb strategy is the opening range breakout. All right, that's the definition of orb. Okay, so when you chart out the orb, you're doing it as you were in the trade. All right, so how I do it is I go to the 5-minute time frame and I mark the highest point in the 5-minute time frame. All right, and I mark the lowest point, all within a 15-minute time frame. All right, now where the market moves from there usually is a direction where the market is going to go, and you're going to have a breakout either to the upside or to the downside. Okay, so and you have to have a full close below that. All right, you don't want to be touching this touching your line like this candle here or here, all right, or here. No, you want a full close below that range. All right, now you can play this. All right, the best way to play this will be to wait for the retest. All right, yes, we broke out. Yeah, you don't want to play the initial breakout. What you want to play is you want to play the retest when we come back into that range. All right, this is us coming back into that range. Now you want to play for puts. All right, this is going to be your entry right here. All right, that's going to be your entry level. All right, This is going to be the retest. This gives you full confirmation now that we are playing puts on SPY. All right. Now this played out perfect. This played out perfect here. All right. So again, you go to the highest time frame, which will be right here, 593, and you go to the lowest time frame, which is what, 591. All right, and you draw those lines out. All right, this will give you 15 minutes. All right, you play from 15 minutes to the 1 hour. That'll be your orb strategy. I play the 15. The 15 has been what has worked pretty much almost. It has executed well most of the time. All right, now this here is all you need. This is 5 minutes. That's 10 minutes. That's 15. There you go. That's your 15. Now, wherever price goes after that, if it breaks above, then now we're playing calls. We're waiting for a full close above this range, and now we're waiting for a retest to come back into that level, and then we will play calls to the upside. All right. This here is called the orb, the opening range breakout. All right. Now, these three strategies are, I mean, they've worked. You know, there's a lot of different strategies that work as well, but you have to find what it is that fits you best. All right. There's a lot of different ones that you can do. Some people's charts, it looks like scribble scrabble all over the chart. It's not clean. This is a clean chart right here. All right. I might add maybe 2 EMAs on there, but that's about it. You won't see a bunch of stuff on my charts. I've been trading long enough now to understand, like, all that stuff. You don't really need that. I'll use 2 EMAs. I'll use the Fibonacci retracement at times, but that's about it. I don't need a lot of crazy stuff on my chart. I love a very simple, clean chart. Gives me an understanding of where the market is moving. I get a clearer picture of what it is that's happening in the market. All right. So that is strategy number 3. This one right here is called the orb strategy. All right. All right, guys, well, I hope that video helped you guys. If you guys have any questions, all right, make sure you guys leave it in the comments below. Make sure you guys let me know what it is that you guys want to see. Any questions that you guys have, make sure that you guys put down in the comments, and I'll try to create a video about it. Now, if you guys like this video, if you guys felt like you got any knowledge from this video, make sure you guys like, make sure you guys subscribe, and I will catch you guys on the next video. All right, thank you guys. Till next time.